Whenever we talk about investing in Australia, a lot of people think about Australian real estate or commodities. But actually, over the years, I've encountered various Australian investors and overseas investors, and there are many different ways to invest in Australia, along with some little tips I can share with you all. If you're interested in continuing to follow along, make sure to keep watching this episode of our tutorial. Hi everyone, I'm the Investment and ESG Asia Pacific Director at Solomon's Group, and this is today's sharing. Let's discuss common investment methods in Australia. We'll cover real estate, the Australian stock market, and alternative investments. In this section, we're going to summarize some common investment methods in Australia. The first one is real estate. The second one is the Australian stock market, often overlooked, including stocks and bonds. Then there are alternative investments, like perfect credit, venture capital, or commodities. Let's take a look at the Australian real estate market and its trends over the past few years. We'll focus on four markets: Sydney, Melbourne, Brisbane, and Perth. Over the past few years, growth in Sydney and Melbourne has been modest, but over 10%. The past year has been flat, especially towards year-end, showing signs of a slowdown. There are some different commodities. Let's examine the Australian real estate market trends over recent years, focusing on Sydney, Melbourne, Brisbane, and Perth. Sydney and Melbourne have seen over 10% growth, though not dramatic. Recently, the market has flattened, especially towards year-end, indicating a slowdown, yet remains hot. Brisbane and Perth, represented by pink and green lines, show significant price increases due to supply not meeting demand. Locals moving from big cities, new immigrants, and overseas investors. This year, growth remains strong. What makes the real estate market so attractive? The market is hot. We watch the pink and green lines for Brisbane and Perth. Factors include supply not meeting demand. Many locals move from big cities, new immigrants, and overseas investors. Locally, prices rose dramatically. Growth remains strong this year. Besides trends, what attracts people to real estate? Let's explore real estate highlights and pitfalls. This applies to local and overseas investors as they face these situations. People trust the Australian economy and real estate's long-term potential, believing in its capital growth. Current rental yields are 2% to over 5%, depending on estimates, isn't it? The local market has seen some pretty dramatic price increases. And this year, it's still maintaining a strong upward trend. So, aside from the trends, what is it that makes people find the real estate market so attractive? Let's explore common highlights and pitfalls in real estate for both local and overseas investors. Confidence in the Australian economy and real estate's long-term potential drives belief in capital growth. Current rental yields range from 2% to over 5%. It's seen as a good option for rental income, with possible tax benefits like negative gearing for locals. Real estate is viewed as a hard asset, a hedge against inflation, with prices expected to rise with inflation. For overseas investors, the Australian dollar's downward trend against the US dollar has made investments more affordable. Based on the data, it's a good option for rental income, with potential tax benefits like negative gearing for locals. Long-term investors see real estate as a hard asset, a hedge against inflation, expecting prices to rise with inflation. For overseas investors, the Australian dollar's downward trend against the US dollar makes investments feel more affordable, though it's a double-edged sword. Pitfalls include challenges like local laws and tax compliance, requiring professional advice. Real estate also involves maintenance costs. To hedge against inflation, people think long-term. Inflation often leads to rising hard asset prices. For overseas investors, the Australian dollar has been appealing. The Aussie dollar's downward trend against the US dollar makes things more affordable. It's a double-edged sword, but common among overseas investors. Investing in real estate has challenges like local laws and taxes. Consulting professionals for advice is wise. Real estate also has maintenance costs. Consider running costs. Discuss with professionals, as market research is crucial. Profit isn't guaranteed. Consider costs, supply, and future developments. It's a double-edged sword. Investing in real estate anywhere presents challenges, like local laws and tax compliance. Real estate also involves maintenance costs. Market research is crucial. Profit isn't guaranteed. Besides costs, consider area supply and future developments. Buying a house isn't always profitable. These factors matter. we often consider running costs, right? Consult professionals or experienced people, as market research is crucial. It's not always a guaranteed profit. Besides costs, consider the areas, supply and future developments. Each area has its demographics, school facilities, and government policies that impact things. Buying a house isn't always profitable. These factors influence development. Apartments also have information asymmetry and various development situations. In such cases, it's best to find a local contact for better insights. What is the demographic background of each area, or the schools and supporting facilities, or even the policies of many different governments? This may actually have a good impact, or even make sure you buy a house. 1. There are opportunities for fixed income. These factors will affect the development of a house. Similarly, apartments may also have many different information asymmetries, or even some development situations. This will cause everyone to have very different feelings about houses, townhouses, and apartments. So, what about the situation of information asymmetry? In fact, especially, even I would feel that if possible, I would try to find some local people who have a connection with whom I can talk to, and it might actually be better. The stock market is a common investment tool in Australia. The Australian stock market accounts for 2% of global market cap, often underestimated as Australia is seen as just about mining. This year, the Australian stock market reached a historic high, and many sectors are performing well. Overall, an increase of 16% was seen. In the past 2 years, I've mentioned in interviews that companies with international business in Australia saw significant growth. It's reached a historic high, and many different sectors are actually performing really well. For example, the Australian stock market performance over the past 2 years increased 16% excluding dividends. Some Australian companies, especially international ones, returned up to 133%. The market might not be as boring as thought. I'll share my understanding and common pitfalls. Firstly, it has growth potential. Also, dividend yields matter. It's seen as high yield, attracting investors. Local investors focus on this. 2 years of performance. Actually, among the 3 stocks, 80% have achieved a return of 133%. So in fact, the Australian stock market may not be as boring as imagined. Let me share my understanding of the Australian stock market and its trap. The market has growth potential and high dividend yields, attracting both overseas and local investors. Local investors benefit from tax advantages on dividends. Australia's unique commodities market offers rare assets during favorable cycles. However, some perceive the market as small, limiting investment opportunities. I believe this view overlooks many opportunities. Another misconception is that real estate appreciates more than stock. Some friends have researched this. Tax benefits attract overseas investors to dividends. Australia's unique commodity market attracts interest during favorable cycles. Beware of trap. Some see the Australian market as small with limited opportunities, but this belief obscures opportunities. Real estate appreciation over stock is a misconception. Research suggests otherwise. Long-term real estate investment without emotional buying/selling is beneficial. The Australian market's ecosystem focuses on long-term investments, supported by tax policies. The Australian market is often seen as small, leading to beliefs of limited investment opportunities. This isn't necessarily true, and such beliefs might cause missed opportunities. Real estate is often thought to appreciate more than stock, but this isn't always the case. Long-term investment in real estate, avoiding emotional buying and selling, can be beneficial. The Australian market, including institutional investors and retirement funds, focuses on long-term investment concepts, and tax policies encourage this. In mature markets, long-term fund flows support growth. Delaying investment due to tax reasons needs reconsideration. Actually, that's not necessarily true. If you're willing to hold onto real estate for a long time, without getting too emotional about trying to buy low and sell high, you might actually benefit from it. Plus, the ecosystem in the Australian market, whether it's institutional investors or retirement funds, tends to focus on long-term investment concepts. Even tax policies encourage long-term investing. So, in these mature markets, we often see examples of long-term fund flows supporting long-term growth, which can be a positive factor. Another common issue is that many friends or clients often think about delaying their investment due to tax reasons. I really think this is something that needs to be reconsidered. Investing is actually The sooner you get into the game, the better. Also, if you're worried about taxes, consider changing that mindset. If you want to make a good investment, it should benefit both. You only think about increasing your investment when you're making good profits. Plus, there are various tax arrangements that might help you optimize your situation. So, don't let tax worries stop you from making investment decisions. As mentioned, in Australia, many investors use various tax benefits to boost capital growth. Here, I'll briefly mention something common like SMSF, which stands for Self-Managed Super Fund, or other types of retirement fund strategies. It's been holding them back from making investment decisions or taking action. As I just mentioned, in Australia, there are many investors who take advantage of various tax benefits or strategies to enhance their capital growth. Here, I'll briefly touch on something common that you might have heard of, like SMSF, which stands for Self-Managed Super Fund, or other types of retirement fund strategies. Due to time constraints, I can't go into too much detail right now, but if you want to understand more, it's worth doing some research or finding qualified professionals to help you out. To get a better understanding, you might want to put in some effort or find some qualified professionals to help you out. Do some research.
Hey everyone, I'm Andy Wong. I'm one of the few people here in Australia and Hong Kong who is licensed or qualified to help local clients and companies with diversified investments, like my years of experience with US stocks, Australian stocks, SMSFs, ETFs, and so on. I hope to share my investment and life experiences with the Chinese community in Australia and Hong Kong through this YouTube channel. If you're interested in having a one-on-one chat with me, you can book a time through the link below the video or in the channel's content. Schedule a time with me.
Alright, so actually, there's another asset that's been super hot in the Australian market in recent years, and one of them is called private credit, which is a type of alternative investment. So, this private credit, I just want to show you some news that you might have seen. In recent years, even big pension funds have started to think more about borrowing some perfect assets, right? And it's not just limited to Australia. Australia, in fact, even some other mature markets, such as the United States, are really tight, and they may want to do it again, that is, add more perfect assets. The situation with perfect credit is the same, so there may be a unique asset class for this one. Why is that? Within private credit, there are diverse assets like infrastructure and real estate. This diversity offers various investment opportunities and may have lower correlation with other assets, sometimes offering tax benefits. There might be flexibility in liquidity or maturity, but these can be complex. It's important to consult professionals to understand these assets, which is why big institutional investors are interested. However, there are risks like limited investment periods and liquidity risks in real estate. Be aware of credit risks and understand the legal and compliance aspects involved. This potential, you need professionals to go through it with you. Investment tools with limited periods, like real estate, face liquidity risks, whether local or overseas. If you want to invest in unique Australian assets, find qualified professionals to discuss it. If you have questions about other investment methods or today's content, feel free to ask. So, even some instruments that have a limited investment period, such as real estate, will face some possible liquidity risks. So you need to pay attention to this, especially prefer. There may be multiple credit risks that you need to pay attention to, and there are some hidden dangers. That is to say, you have to really understand some of the laws on some of the products and some of the compliance matters. What is the situation like? That's why information asymmetry comes into play again with these risks. So, whether you're a local investor or an overseas one, if you really want to get into these unique Australian assets, my advice is to find some qualified professionals to discuss it with you. Alright, today we talked about 3 different categories. If you have any questions about other common investment methods or about today's content, feel free to drop your questions in the comments or reach out to me via PM. I'm here to help. Thanks for all your support. Thank you. Hey, feel free to head to the comments section to leave your questions or reach out to me via PM. I'm here to help. Thanks so much for all your support. Thank you.
Thanks for your support. Remember to leave a comment, give a thumbs up, and share. Our teaching share doesn't include any investment advice. So, before you make any decisions, remember to consult the relevant licensed professionals for advice. Thanks a lot.